4 minutes.
Gentleman from North Carolina is recognized for 4 minutes.
Thank you, Mr. Speaker. I dearly wish that this bill was the one that's being described by so many people on the other side of the aisle. That sounds like a really tough bill. And this bill, I think, I hope will become tougher as we go along. I agree with so many over there who have said that they really do support the idea of home ownership and want to make sure there's a mortgage market that lets people buy homes. Mr. Speaker, the mortgages we're talking about have nothing to do with home ownership. According to the mortgage bankers themselves who oppose this bill, 72% of subprime loans are refinances, not purchase money mortgages, and only about 1 in 10 subprime loans is to buy a first home. Lehman Brothers says that 30% of the subprime loans entered last year will result in final foreclosure, a family being turned out on the street by the sheriff because their home was sold at a foreclosure auction at the steps of the courthouse. Do the math. 1 subprime loan in 10 helps people buy a home, a first home, get into home ownership. 30% will result in foreclosure. The loans that we need to get at, we need to prohibit are costing Americans home ownership, not helping with home ownership. Now, several speakers have said that they think the consumers should make choices. There should be a variety of choices available to consumers. Sometimes they say that this bill will shut down market innovation. Well, Americans are for innovation, Mr. Speaker, just as they are for reform. Americans are fundamentally reformers, so politicians have figured out to call everything they do a reform. However, obviously, contrary to the public interest it is. And now American business has learned to call everything they do an innovation, regardless of how bad it hurts consumers. I can think of many wonderful innovations. When we think of an innovation, we think of a scientist in a lab coat coming up with new products. Mr. Speaker, I'm now the age my father was when he died of a heart attack in 1965. There wasn't a thing that we could do to help people with heart disease in 1965. But I am on a cholesterol medicine because I inherited from my father high cholesterol that I hope will allow me to outlive my father. I think that drug is an important innovation. I'm glad we've made that innovation. Mr. Speaker, this necktie is an innovation. 10 years ago, you could not buy a silk necktie that was stain resistant. And for those folks like me who tended to miss their mouth from time to time, the cost in new neckties in any given year was hundreds of dollars. But this tie has a nanotechnology process that causes liquids to bead up and roll off rather than soak in and stain. Mr. Chairman, Mr. Speaker, this necktie is an important innovation to me. But what on earth do we mean when we say that a mortgage is innovative? It means simply, Mr. Speaker, that there is no end to the variety of terms. There's a proliferation of indecipherable terms that are not designed to help consumers. Alan Greenspan called them exotic loans. Others have called them toxic loans. The innovation is not really about allowing consumers to narrowly the loan they get to their specific circumstances. The late Ned Gramlich, a well-regarded former Federal Reserve Board governor, asked why was it that the riskiest loans were being sold to the least sophisticated consumers. It was a rhetorical question, Mr. Speaker. He knew the answer. He knew those loans were being sold to people to take advantage of them, to separate from middle-class homeowners more and more in the equity in their home, to trap them in a cycle of having to borrow and borrow again every time they borrowed, losing more of the equity in their home. Some of the other speakers have talked about the importance of refinancing out. Mr. Speaker, a mortgage system where people have to borrow money to pay off the mortgage they're in now is not a mortgage system that works.
Has expired. Gentleman